So you have a high right here, a low, a lower high. What do you expect to be formed next if we are continuing with the downtrend? Whoever that asked the question will be forming a lower low. Good. However, in this area, we refuse to form a lower low. We refuse to form a lower low. Instead, we created a lower high. And then a higher high. What happened when we created the higher high? We broke market structure right there. BOS. Why do I say we broke market structure? We broke the last lower high that created this low. So we broke this low, we broke this high that created this low, telling us that we are no more in a downtrend. Right? Immediately I see price break above this lower high. I am now going to wait for a retracement, and usually what I do is I pull my fib and then I measure from the bottom to the down. Everywhere below the 50% area is my re-entry for a buy. So in this case, this gray box would have been my entry for a buy. And look at how price went straight down into the premium area. And what happened? Boom, we bought. Does that make sense? So using market structure, a high, a low, a lower high, we wanted a lower low to form. Instead, we created a lower high, and then we broke market structure to create a higher high. For you to enter the market, you need price to retrace below premium area. Where do I mean by premium area? 50% and below. So 50%, 61.8, 71%, 78.6%, and 88.6% area. Does that make sense, guys? Immediately price come around that area, that is where you're looking for your entry to join the trend. And beautifully price created a higher low. Have I answered your question? If you're talking, I can't hear you.
Hi, can you hear me now?
Just a little bit.
Sorry, I don't know what's wrong with my laptop. I said for a sell, it's the last before the last time.
It's gone again. You're out again. I can't hear you. Okay. So my client is saying, so where can we put our stop loss? If I'm entering the trade using this strategy and I don't see a clear institutional candlestick, I'm going to put my stop loss at the last low. So this is where my stop loss will be. My entry there, and then I'm gone. The same way, let's see what happened here. I set for a low, it is the last low that forms before the last high for a buy. Yes. That's all you need. Let's do one more example. We have a high right here, a low, a lower high, a lower low, and see what price did. Instead of forming a lower high around this area, we broke this structure right there, and then we formed what? A higher high. And what did I say? Once we form a higher high, I want you to pull your fib from there, the bottom to the top, and mark out 50% and below. That's where your entry is going to be. And what happened, guys? Boom, there was a buy. Is there something I'm doing wrong? Am I making sense here? Is something clear right here? Give me a 1 in the chat box if this makes sense.
So with all those confirmations, we would look for a sell after that, yes?
What?
Buy. We look for a
Oh,
buy.
we're looking for, okay, sorry. I just came from somewhere else in my house. Sorry, I got distracted.
Yeah, so from lower low to lower high, you put the fib retracement, and when it's at 50%, that's your entry point for a buy.
That's it. Anywhere
Okay.
below the 50% where price gives you a wick rejection, that area you want to buy. This is a buy scenario. I've already treated the sell scenario with my study group team. If you want me to show you a sell scenario, I can show you a sell scenario right here as well.
Yes, please.
Okay, so for a sell scenario, let's start from here. A low, a high, a higher low, a higher high, higher low, a higher high. Once we got to this point, look what happened. Break of market structure. We broke this structure, and guys, I always say wicks do not matter. So this is where the structure actually broke. Let's pull our fib right now. Immediately you saw the break of market structure. Let's pull our fibs now and see what happened. From the top to the bottom where the structure got broken, 50% to 88%. Gray box, what do we see right there, guys?
Head and shoulders.
I'm actually considering the sell-off that happened right there in the gray box. We fibbed 50% and above, break of market structure. I'm not even using institutional candlesticks. Look, we just sold. Right? We just sold. The same area, the same thing that I'm looking at right here. We had a break of market structure around this area, and the same area we had a sell. Now we have actual break of market structure looking around this area. So potentially DAX could give us a sell-off today. DAX could give us a sell-off today. If I should fit from here to here, 50% and above, we're already swimming around that area. To 88, we're already swimming off around that area. Potentially, we could see dollar, we could see the DXY. Okay, shut up, Francis. We could see the DAX giving us a sell-off right here. Today, we've broken the market structure. We flipped from the top to the bottom. We're already swimming in the 50% area. Confirmation to enter for the sell is to see a wick rejection inside this gray area, a wick rejection. Something like this. Something like this. This is what I'm talking about, wick rejection. Something like this, something like this. Inside this gray area, once you see that, put off your sell. And this area that I've already marked up as my mitigation area, you could TP around this area. Is that clear? Can I get some twos in the chat box if that makes sense? I have 8 people on the chats right now, 8 people. So if harmonics is too hard for you, Monty, this one is your setup. This one is your setup, Monty. Just go and learn this and smash it. I'm gonna put this on YouTube so you can go back and watch it how I'm doing it. Same area, high, low, lower high, lower low, lower high, lower low. What happened? Break of market structure. All I need is for price to come 50% and below. 50% and below. Where is my 50%? Here and below. Then I can buy. Am I making sense, guys? I'm just showing you this over and over and over and over. Look at this area. High, sorry, low, high, lower high, higher high. And look, we broke this structure right there. I'm showing you on bigger time frame. We broke this structure. Now I'm going to pull my fib from here to there. 50% and above. 50%, 88.6 area. What happened? We started seeing the sell-off. Does that make sense, guys? Thank you. I've got one person saying yes. The rest of you, you can just look at me. I see if you are not getting it. This is happening in the market most of the time. Most of the time. The same happened in this area. Same happened. We got the break of market structure. You retraced, and that's it. Boom. Look at this. Break of market structure, 50% and above. Drop. Break of market structure, 50% and above. Drop. This is a perfect example of when it goes wrong. Break of market structure, 50%. You probably entered around there, and look, it dropped. This is why I said to you, your stop loss is here to avoid you losing more than necessary. Even though eventually it came back into buy, but then if you're in DAX and you are swimming in this drawdown, I believe you know how it feels like, guys. I don't even want to tell you about how it feels like. Your heart will probably sink. Break of market structure right there, 50% and above, sell.
But Francis, can I ask you, sorry Francis to cut you, you see where the drawdown was that not just to fill that imbalance on the left and then it just came back up again?
Of course, hence why you incorporate smart money and your life will be made easier. We feel that imbalance right there. And there we go, boom, on the buy. This is the reason why I use smart money on every strategy that I'm looking at, because smart money fills in the gaps of what I'm not seeing with any other strategy I'm using.
So if that was the case, then if the lot size was small enough, would you not just stay in the in the trade, because eventually it will come back up, rather than lose the money, rather than stop loss yourself out?
I'm
Wouldn't
gonna
you
be
just
honest.
wait?
I'm gonna be honest with you. With DAX, if you're in this amount of drawdown, your heart will tell you to close the trade. I won't be the one to tell you to close it.
Okay.
You know it for yourself. Who are the DAX traders here? Can you tell me you will stay in this trade with all this drawdown, even knowing that there is an imbalance here and price could just react off it? No, you'd close it. You look at that. Somebody passed out. I'm talking from experience, so I know it. I would rather want to close it. I would rather want to have my protective stop loss. Just take me out. Then I can find a re-entry. And look, guys, when it reacted off the imbalance, look what it did. It broke market structure right here. High, low, lower high, lower low. What happened here? Break a market structure right there. 50% and below reacted up there. So you could have had another entry right here. And that's it. The money you lost here, you could have made it back. So why wouldn't you wait for price to hit your stop loss nicely and wait for another time to enter the market?
Please, I have a question, Frank. For the FIP, is it okay for a buy? Is it 50% and below, 50% and above, and for a sell, is it 50% and above, 50% below? Please, can you make it clear?
Look at this. If I'm pulling my FIP to buy, I'm going to pull it from the bottom to the top. Right?
Yes.
50% and below is what I'm looking at.
Okay.
I'm saying 50% and below because I'm pulling my FIP from the bottom to the top. Right?
Okay. Yeah.
And if I'm doing a sell scenario, I'm going to pull my FIP from the top, right, to the bottom. 50% and above, because I'm pulling my FIP from the top to the bottom.
Okay.
Right? But then it's the same stuff.
Okay. Okay. Thank you.
You're welcome. Have I made justice to market structure breaks? Break of market structure. Have I really made sense out of it for you guys? How do you get the TPs? So in this case, my TP is going to be the nearest high. That'll be my TP1. So once price reach the nearest high, I'm going to take my partials and leave the trade to right. Have I made sense with the market structure breaks?
Yes, but remember one time you told us that if there is an equal bottom, double bottom, then it might be a risky trade. So is this a risky trade?
I've always told you guys, if you see a double top at your sell entry, it is a high risk trade. Oh, thank you.
Okay.
Right. Every time you see that happening, it is a risk, a high risk trade. So please be careful when you are trading with double tops above your sell entry or double bottom below your buy entry. Look in this area, there was some sort of double bottom right here. If everyone was trying to sell around this area, look at what this wick did. It just came down, took everybody out, and then straight it went into a buy. This is what I'm talking about. I can show you so many examples in the market. Do not fall. Do not be a victim. Do not be a victim. Another one right here, double bottom. Look at the way price just pushed down, squeezed everybody out, and it went straight into a buy. However, if you understood break of market structure, 50%, you could have entered right here nicely into a buy. Will you stop loss right there? I love using this strategy when price is forming divergence. I love using it when price is forming divergence. So in this case, look at that. Divergence. This is when I like using this strategy. Don't tell me where I went to learn this from. It's purely my own instincts. For my own back testing in the market. This is what I've always back tested. I've back tested and now I know that it works. So I'm teaching you.
Okay. Sorry, Francis. So you see with the other indicator, the DMI, how would you read that? Monty, can you explain, please? So Francis just showed us the divergence on the RSI, but for the DMI, it's really jumbled. Would you read that?
Okay, so can you see now the black line is at 40%?
Yes.
That's the first confirmation you look at.
Okay.
Okay, so now if we go here, example here, right? Like when the blue line crosses over the red line.
Yeah.
So first of all, we need the black line to be at 40. So wherever it's at 40, that's where you want to enter the market. That's a safer option.
Okay.
Okay, so now if we want a buy, so if you look at where the blue line is above the red, okay, so at 40, now the blue line is above the red. That's your second confirmation of right, this is going to be a buy. And then you go to line it up with your candlestick to see, is this going to be a buy or not? And this time around, it's a buy because of the blue being above the red. Do you understand now?
Yeah, so now where price is now, all the lines are underneath the 40, you would still buy?
Yes. No, because we need the black line to be at 40. The first confirmation has to be the black line has to be at 40. If it's not at 40, so like here, we are going to wait until the black line gets to 40.
Okay.
Right? And then if it's a 40 above, then it's a safe op. Then you start thinking about, right, what do I do now? Do I buy or do I sell? Now, where is the blue line? Is that above the red? Right, we go for a buy here.
Okay, so we wait. Okay.
Yeah, so we wait until the black first step has to be the black line has to be 40. Has to be at 40.
All right. I'm going to look on those videos. Thank you.
Yeah.
All right, so I believe we've actually digested some few information right here on the Zoom call today, and anybody on this call is actually having nice nugget to take away. Give me a 3 in the chat box if you're happy you were on this call. Thank you. I think I've done my job. I'm going to put the recordings up. I'm going to try and do it ASAP. If I don't get it done by midday, then it probably means I'm asleep. So when I wake up, I'll get it done for you. But yeah, for now, thanks everyone for jumping on the call. We'll catch you all another time. I wish you all a very beautiful week.
Thank you very much. Thank you, everyone. Thank you.